Now, with the global economic uncertainty, fluctuating commodity and currency prices, miners will need to pay particular attention to the value chain in their operations. Joining us now to discuss operational trends in mining in 2012 is Ebrahim Takolia. He's leader of the Mining Advisory Service Practices consulting firm Deloitte. Ebrahim, thanks very much indeed for coming through. Before you came through with a chat with Dipros, he's from an NGO, and we were talking about some of the practices in mining that have brought about a situation where there is conflict between the companies and the communities which they operate. Is this a situation that's still prevalent in 2012, given that the issue has been around for such a long time?
Yeah, it's definitely something that's more prevalent. One of the issues that you have is that, and I'm talking of the South African and African situation, is that you have poverty and unemployment. And a lot of times mines are seen as the solution to the problem.
Right.
Now the problem that you have
Should
is...
they not be?
Well, the mines can be part of the solution, but they're not the entire solution.
Okay.
If mines could employ economically all of the people in a community, they would. The issue that you have is that they only can do so much. Mines increasingly are doing more and more, and they are asked to do more and more, and the expectation of society is that they do more. So if you compare what mining companies do today compared to what they may have done 20 years ago, they do a lot more.
Are they doing more now?
Yes, but they, it's always because the social issues are so complex. It's difficult for a mining company to address all of the issues, and there will be, you do tend to get disgruntled people, or people seeing mines on their doorsteps and saying, these people are making lots of money, where is my share? So those are the issues that tend to come to the fore. But mines also, they have shareholders who want returns. And that's one of the issues that affects mining companies.
Now, as I was telling the pros just before you came about the conflict between the communities and the miners, and I was actually showing you talk about returns. We're just showing today the JSE closing at a record. Investors are looking for return for the money. But maybe let's begin the discussion then by looking at the broad trends that you are picking up for 2012. Just let's go through the main ones.
We've identified 10 trends in mining, and one of the first one is the cost of doing business. That has gone up significantly. There are lots of cost drivers.
Whose fault is it?
It's not really a fault. It's just
I'm always looking for someone to blame, so we can then get them to fix it.
I would say the fault is, basically there's a lot of demand for commodities which drive up prices. So if you look at a mine, they have power costs. So you could say Eskom, if you're looking at the South African situation. The other big input cost is diesel or oil, and that's also something that's fluctuates. But when the rand depreciates, that cost goes up. And the other is labor, which also tends to increase costs. So those three are the factors that really drive mining costs. But also what's happening, and it's not just a South African situation. It's also something that's happening globally, is that mines are getting deeper and they're getting more complex, and because of that, the very nature of going deeper and the complexity increases the costs. So in terms,
I think worse in the South African situation, because we know it's on record. South Africa has the deepest gold mines in the world. 3 kilometers underground. Anglo Gold is still searching for gold under there. Okay, so that's the first point. Let's go to the other 9.
The other trend is the commodity price chaos. So what we're seeing is a lot more chaotic prices or fluctuating prices if you look at copper's fluctuated from about $7,000 a ton to as high as $11,000 a ton in the last, let's say, at least 18 to 24 months. And that creates a lot of uncertainty in the market. The same if you look at I wouldn't say gold too much, but gold also has fluctuated. So what happens is commodity price fluctuations are now the norm, and they affect planning, and they also affect economic stability in that they are input costs into all of your consumer goods. And fluctuating prices, create uncertainty.
Ebrahim, I'm being told that we've got 2 minutes in which to do the other 8.
Well, what I'll do is I'll stick to the main ones. What they call the battle to keep profits. Well, what we're seeing, the discussion in South Africa around nationalization is happening all over the world. It's all countries saying, we have finite resources, they're being extracted.
Yeah.
Let's try and get whatever we can get in, now,
Yeah.
and extract as much as we can. So that's
Sure.
another issue, but you've touched on it earlier, so I'm not going to expand on it.
Sure.
What restless stakeholders, and what we mean is communities around the mine, all other stakeholders. Everybody wants to be part of the mining economy, and as I explained to you before, it's very difficult to meet everyone's expectations.
Absolutely.
The labor pains, and we also mentioned that, is
workers will always want more.
But the other issue that mining affects is that, or that's affecting mining, is the shortage of skilled labor. Because South Africa has a lot of, we have a lot of labor. The problem is there are certain skills that are required for mining, and we have a shortage in that. And at any one point in time, there's quite a few thousand jobs in mining that just can't be filled.
Yeah.
In terms of
you can do two more.
I'll do two more. One is capital project issues, and that's really around the fact that there are lots of projects in the world, and there's limited skills to execute them, and they're also getting more complex. And the final one is non-traditional financing. Because of the financial market crisis, mines have had to become more innovative in the way they finance projects, especially junior miners.